What's up, family? I'll be teaching you the best hacks on how to identify supply and demand in the markets. And of course, this video is gonna really give you a good edge into knowing when to buy low or sell high, because that's what everybody wants to do. We want to identify moments in the market where we're able to sell low, or rather sell high, and of course to buy low. So make sure that you watch this video till the end, and I'm gonna be explaining it step by step for each and every beginner watching this video. God bless you. Okay, my learned friends. So right now, I want to actually just define for you what is a supply, what is a demand, and of course, we want to really bring this understanding with structure and trends, right? If you watch my previous videos, this would be a follow-up video of just trying to teach you smart money. So I will definitely create a series for that. But let's go ahead and touch on this. So where we have an uptrend, which is something like this, okay? So that is a bullish market, as many of us would know it, where the market, of course, gives us higher highs, and of course, we have higher lows, right? So the main idea in trading is to wanna buy low, so hence we call this a higher low, and of course, we wanna sell high. So in a downtrend, where we can have the market giving us lower highs, and of course, we have lower lows. Okay, so that means we want to basically be selling here, and of course we want to be basically buying here. Now the whole idea about smart money and supply and demand is that we are understanding through smart money, we understand that there is a particular group of traders or institutional traders that are in the interbank market. So the interbank market is your central banks, is your stock exchange, is your hedge funds. It's basically as well as your commercial banks that are buying with billions or bulks of money, as they refer to it. So now this brings me to the definition of a demand. To say a demand is an area where there is a demand of buyers, or that's where buyers are coming in the market. Okay, and of course, a supply would be an area where we have sellers coming into the market. And of course, how do we identify these areas? If you watch the previous videos talking about break of structure that validates that the market is still going up. Now, everybody wants to buy low to appreciate with the price, so to make money. Okay, so what happens is that I really need to show you this with the trend to say, as the trend basically gives us this higher low right here to buy low, it creates a demand because that's an impulse, right? So we have what we call an impulse, a pullback, impulse, and a pullback. The very same thing applies for a downtrend. We have an impulse, a pullback, impulse, and a pullback and an impulse. So that is the main trend, where we have an impulse where sellers are coming in that is bringing us supply. And of course, we have that pullback. So whenever we are having that impulse, we are having buyers pumping in money in the market, so to create that movement that we're seeing to the upside or to the downside. And of course, due to that, we're able to, basically draw up a foundational map to say, okay, since we know this is where they get in, this is where we're going to take this area and call it a demand area. That is most likely definitely going to be coming back where the market, that's where it's going to be coming back to touch, to create another higher low where we go higher. The very same thing here that applies is that we can be having these areas of supply where sellers are coming in to create an impulse. And of course, we can have it as an area where now when the market comes back, it comes back to create a lower high in order for one to sell high. I hope you get it. I hope you understand it. And I hope now we're going to move to the next concept on how we identify these things. As I told you at the beginning, I want to teach you the best hacks on how to identify supply and demand. So that is the first level, right? That is the textbook style, where we're talking about the higher low. And of course, we're talking about the area in the higher low or in the lower high that will affect the future lower high or higher low when the market comes back to mitigate that area. Okay, and of course, this will make more sense. Some of you might be catching on where we're talking about imbalances that get filled in order to go up, where we're having the influences of demand areas. But this is a follow-up video, guys. So watch it from the time I get to talk about it. I will definitely create a playlist for you guys, right? So now, once we've submitted that, my learned friends, now we want to understand the trend. Of course, we understand that the trend when they buy, create impulsive, or rather, we are having supply and demands in that area, but it does not just happen just like that. There are also supply and demand areas that are in between the market, that the market would want to come back when it's filling in imbalances in that area. Okay, let me just show you what I'm talking about. So for example, we may have the market busy going up, creating impulse, and within the impulse it creates a small pullback, and that small pullback becomes a candle that is a bearish candle that pushes all the way up. And the market will definitely, what it will do on this candle, so let me just make it to look like, of course, we are seeing the real thing right there. Okay, let me just draw it like that. There we go. So let's assume that's a bearish candle that the market has created within that impulse. So they will create that in order to basically tank the market down, that when it comes back to that area, this candle here, you can mark it as a zone that the market comes back to mitigate in order to give us a higher low. So the very same thing goes with the bearish trend. We may be having an impulse, and of course, within an impulse, we have a bullish candle that appears. And of course, that bullish candle, it may be used by the market to say when it comes back to that area, they will basically want to bring price. So let's go ahead. And of course, price will come back and create a lower high for us in order for us to sell high and for us to buy low. Do you guys get it? So we have two levels. We have the first level where we have, it can be here, okay? And of course, the market can come back all the way there. But if it is filled in a sufficient price imbalance or fair value gap, then it does not need to come all the way there. It can come to any POI or any supply or demand. In this case, we have a demand. In this case, we have a supply. Now we're going to go straight into the markets to kind of really solidify this concept for you and make it quite clear that you may apply it within your day-to-day trading. And of course, you're going to take advantage of this. And I am a NASDAQ trader, so you can apply it on NASDAQ. You can apply it anywhere, even if it's on synthetic indexes. I'm going to be coming with that content very soon, guys. So anyway, we're going to go straight now into the real-time chart examples where I show you this. Okay, family, so I'm going to start where we're talking about supply levels. Of course, this is the current real-time chart that we've been having on NASDAQ. And I just want to really submit to you this as we can go, my learned friends. If you're still keeping up and watching, please do subscribe if this content and I teach the way you understand it, of course, definitely do like. Okay, so as you can see, this area was a new high that the market had created. You can draw that across, and as you can see, the market did come back to fill it in within a spike, as you can see that. So I'm just going to highlight it there. And the market did come back to kind of mitigate that. And of course, as it mitigated, as I said, family, remember, you must have this in mind. I'm just going to draw something again. You must have this trend in mind or the explanation that I gave, right? If it's a downtrend, that place where sellers come in, okay, to create an impulsive move, the market can come back to that. Or within the impulse, if we have a candlestick, the market can come back into mitigating that candlestick to sell. So you're looking for two types of supplies in this case as we go along. So as you can see, that's the very same thing. We had a lower, or rather a lower high being created. The market created a new lower low, came back into it, and the market sold. Now, as you can see, the whole trend now, it was an impulse move, and we had a bullish candle in the middle of the whole impulse move. What happened? The market came back and mitigated that and gave us a beautiful impulse again. Now, as it created that impulse, we had a pullback. Of course, as soon as we had that pullback, we had sellers now given where sellers were coming in again. We marked that as our supply. The market came back, mitigated that. So I can also put an arrow just to make it clear. So as you can see, a nice sell right there. We have another point where they give us another impulse, and of course the market comes back, mitigates that with a beautiful sell. Another impulse, again, we have a beautiful sell. I hope you guys can see this, and I hope it does really make sense for you guys. So we have two types of supplies. Many people only cover whenever the market gets to create a lower high, but of course, within that, so if we even go to smaller time frames, you can see clearly what was happening here. It's not just only a candlestick, it can be a range within a whole impulse that you can refer to it as an area of supply. Remember, it's not a candlestick, it's an area of supply. As you can see, this came back all the way there and mitigated it. So as you can definitely see that sell, and of course we had it creating that whole thing again, came back, we mitigated it. So every time when the market gives an impulse, pulls back, mark that. Definitely the market will come back into that supply to come in again to sell the markets hard. And of course, as you go into the micros within where the market goes and mitigates them. So we have a bullish trend within this whole impulse, the market spiked into it and sold. So I'm teaching you legit stuff that I definitely use in the markets daily. Okay, so right now, of course, I'm gonna go to the next example where we go into a bullish trend to kind of really identify demand areas. Hey family, so we're on the bullish market, identifying demand areas in the market. Bear in mind again, guys, the example that I gave in terms of the overall layout in the market is that as we are in a bullish market, is either that the market comes back to mitigate areas where there was lower highs and comes back to create a new higher low rather. Please forgive me for that. And of course, it's either as well in a bullish market, as we are having that impulse, the market can come back to mitigate those areas within that. So that's what we're looking for. We're looking for entries like this where we, higher lows, or we're looking at when the market comes back within an impulse to create a new higher low to also create a new demand area. I hope you understand me. Let's go ahead straight into the markets as you have seen this example that I already have. Of course, family, it's quite clear right here as this trend was already starting. We had a demand area that was created. The market came into it, spiked. Okay, we had a demand in the middle of the trend right there. The market came back, mitigated that beautifully. Again, this is structure. Okay, this is structure. As it was giving us a higher low, what happened? The market came back, mitigated that. So that was now the new higher low that the market created. And of course, what happened? We had a pullback, came back into the previous high low as our supply, as our demand, and went all the way up. Again, we have that new high low that has been created and creates an impulse. And of course, we have buyers coming in back into the impulse, and the market goes all the way up. We have again a demand within the middle of an impulse, and of course, the market gives us a pullback and comes back into that. And of course, as you can see, it does this whole pattern throughout. So it goes all the way, creates demand areas after, or rather come back into that area and bounce off. That's what we're talking about when we're talking about supply and demand. It's the easiest way to buy low and to sell high. And of course, this is just to understand the narrative that we have the interbank market participating, or we call the OTC, over the counter, right? Participating, and we as retail traders have to keep up with the pattern in the manner and the behavior in which they are moving in order to buy where they are buying and to sell where they are selling. And of course, family, you can really apply this, step by step with the playlist that I've taught you. The previous video was BOS and liquidity, just to identify that. Now it's adding on to that. The next video, as you subscribe, I will be talking about the ultimate smart money layout. So what you need to have on your chart in order to qualify to get entries. But I'm bringing you closer step by step into getting the right trades. And of course, I can teach you until you become blue on your face. If you do not practice and backtest what I'm teaching you, you're definitely gonna not pick up a skill. Knowledge that's not applied will not become skill. Skill is applied knowledge. So watching this video alone, that it can only make you feel good, but applying it is gonna give you results. Go and spot it in the market, what I've been talking about. Go see the consistency of demand areas and supply areas and see how they affect the market in real time. Then of course you are gonna be a good and a better trader as you carry on practicing. And of course, guys, this is your brother in the kingdom, Emmanuel Mukhali, signing out. Make sure you catch the next video right away. God bless you.